I had moved from Chhattisgarh to Mumbai to do my CA. One thing is a lot of this accounting department staff of big companies, they were busy in stock market till about 2:30. Because earlier market used to open between 12 and 2. So there was a lot of talk, intense talk in that accounts department about the stocks. I was reader of balance sheets, I was reader of books. So somehow I had developed liking for a lot of high finance fiction books, you know. So that fiction developed a lot of imagination in my mind. I fell in love with the stock market, and while doing CA, I interacted with a lot of people, and I said, this is the place where I want to make my career. So somehow I passed my chartered accountancy in '83, and then took a plunge in the stock market.
And what was your first multi-bagger? Tell us about that.
First multi-bagger, you know, that was a Vaishya Bank. Vaishya Bank in '91, when this bull run was starting. So I bought Vaishya Bank at about 21 rupees, 21 bucks, 22 bucks. And अगले 2.5 साल में 2000 का भाव गया, 100x. So I think I sold at roughly 2,300 rupees. So that's how I made the first 100 bagger in the stock market.
So what shaped your investment philosophy over the years? I know that you are a voracious reader. I know Warren Buffett is someone you really look up to. If you can tell us a bit about what went into the process of actually honing your skills and becoming a successful investor.
It's a journey in the sense that still the journey is on to become better investor. When I became chartered accountant, that time, see, market was a bucket shop in the sense that it was not developed at all. So if you are a chartered accountant, you can read balance sheet, you can have access to the balance sheet. That itself was a huge competitive advantage. I used to maintain a balance sheet library of 250 companies myself. And anybody who would be having balance sheets, they'll become my friend. So my weekend hobby was to read balance sheets. So that's how I built the knowledge base about the companies very early. So starting early is very important. I have a good knack for numbers. So I was able to figure out what is the installed capacity. That time there was licensing. How much is the production, what is the cost ratio, what is the selling price, what is the margin, how is the cash flow. Those things would stick to my head. And then intuitively that how to pick stocks in the sense that the price value gap, how to buy something cheap, you know, and then make money. So we started buying 200 shares, 300 shares in 85, 86 at 15 bucks, 20 bucks. The moment it doubles, we'll sell. Then slowly we started learning the story of hold it for longer period. We started reading books. See, in 80s, one of the biggest crises was there were no books available, which you cannot imagine. That time there were no books available, no magazines were there. Then, you know, slowly in 1991, the books started coming. And then we started getting a little more formal knowledge. And in 1994, I read balance sheet of Berkshire Hathaway and started going to Omaha to listen to Mr. Buffett because he was so impressive. And that changed life in terms of, I found my guru in investing. And then I learned a lot from his writings, his AGM speeches. There was a magazine called Outstanding Investor Digest, OID. And he used to publish the global investors' interviews, the way you are interviewing me. From there we learned a lot. Knowledge was coming in bits and pieces, but the competition was also less. After 93, 94, the market just exploded. Foreign firms came, analyst community got built up.
It's knowledge indeed, sir, but I also feel you have a knack for identifying good companies at the right valuation. I know that you look for companies that have economic moats, companies that are well governed. Beyond the balance sheet, is it something very instinctive that comes to you?
Yeah, see, basically, now I can say investing is about two things, good business and good management. If you get these two right, I think 90-95% job is done. My approach is to understand the businessman. Business is known. What we don't know is who's the person behind. So when you meet him, is he a kind of a Formula 1 driver, or is he just another driver, or is he a complete novice?
Yes.
So you have to understand the competence of the entrepreneur, how passionate he is, what is his dream, what is the imagination of his business. That part is what excites me. And when I see that what he's planning is not there in the price, then that's where the price value gap starts coming. Basically, stock investing is about finding the gap between price and value. Then the game starts. Market is a funny place where you can buy 100 rupees thing for 10 rupees and you can sell 10 rupee thing for 100 rupees. Don't be too much reliant on the price for investing. Price is only to see what you think is the value. Is it above the value or below the value? Below it is, you go and buy. If it's above, then stay away.
So, you know, we saw the IT cycle where there was a huge boom and investors who got into that cycle benefited. Then there was a chemical boom in the chemical space. Where do you think is the next multi-year upcycle then help as far as creation of wealth is concerned? Where do you think investors really should be looking from a long-term perspective, of course?
See, only later on you figure out that this was a cycle.
Yes.
But you know, there's
It's
always
hindsight.
But I would say private banks, lenders, I think we are going to have a very strong banking cycle as the growth picks up for the economy. That looks to be one big area. Your insurance, your financialization of the entire savings space, that's a very large space. The sectors which have been hit more recently, like say automotive, they are coming back. IT itself, IT is the second largest industry of India in terms of profit pool. So tech is not to be undermined and it has the biggest potential to make money. Right now, there is a kind of disappointment with the global recession and all, but that will throw an opportunity to really buy some interesting companies in next 1 or 2 years. Then the India story is building up, you know. So in India story, you have infrastructure, you have cement, steel, contractors, engineering companies, consumer companies. India is a huge consumer market. Then on top of it, the real new one which is coming up is the digital companies, you know, like, so they were expensive last year. So they have been beaten out of shape for some time right now. And a lot more companies are going to come in IPO market. So I think you'll have ample opportunity to look at.